This TradingView indicator predicts reversals in the market. And I want to show you guys this indicator right away because it's both free and it's also relatively easy to use. But please guys, make sure to watch this video to the very end because if not used correctly, this indicator can give many false signals. But guys, I don't want to waste your time, so let's jump right into it. So first of all, you want to open up a chart in TradingView. Right now we're looking at gold on a 4-hour time frame, but you can use this indicator on pretty much every time frame. But what you want to do here is that you want to go up to the indicators tab and you want to search for all candlestick patterns. And you want to press this indicator right here. And as you can see, now we can see many signals appearing here on the chart. However, it's important for us to choose what kind of signals we want this indicator to produce. So we go up here to the settings tab of the indicator, and as you can see, we get a long list of different candlestick signals this indicator can produce. So here, it's important to choose signals that are both reliable and also signals that happens a lot. So what I'm going to do here is that I'm going to uncheck the abandoned baby, I'm going to uncheck the doji candle and the dragonfly doji. However, I want to keep the engulfing pattern. The engulfing pattern is a reversal pattern that happens frequently in the market. It can be both bullish, meaning that it indicates a potential reversal to the upside, and it can also be bearish, indicating a potential reversal to the downside. If you are not familiar with this pattern, I recommend you guys to pause this video right here and study this picture for a while. The next pattern I want to keep is the hammer pattern. The hammer pattern is a bullish reversal pattern. It has a small real body and a long lower wick. This is yet another pattern that happens frequently in the market, and it is a bullish pattern indicating a potential reversal to the upside. Once again, pause this video right here and study this pattern if you are not familiar. The next signal I do want to have here is the shooting star pattern. So I check the shooting star pattern. This pattern is the opposite of the hammer. This is a bearish reversal pattern with a small real body and a long upper wick. Once again, if you need to, pause the video and study this pattern for a while. It is important to understand the pattern because even though this indicator shows you guys the pattern automatically, it's not perfect and it will miss some signals. So it is important to be able to identify the signals on your own as well. But these three signals, the engulfing pattern, the hammer and the shooting star, are the patterns I want to choose for this video. But of course, if you want to, you can fool around with this indicator on your own and choose even more signals. But I think to begin with, these three signals are a good starting point. So let's click OK. So as you can see on the chart, we have a bullish engulfing pattern right here, and this one actually predicted the reversal to the upside. We have a bearish engulfing pattern right here. This one predicted the reversal to the downside. And once again, we have a bullish engulfing pattern that predicted the reversal to the upside. But here, and this is very important, for these three signals, I would have personally actually only taken one of these trades. And the reason for this is that in order to take a trade, we need multiple confluences, or in other words, we need multiple variables happening at the same time in order to take our trade. So to make the signals even better, I want to open up two additional indicators, and these are indicators I use a lot. They are pretty common, but they are super useful. The first indicator we do want to open is the RSI, and you are probably familiar with the RSI. If you want to learn more about that indicator, I will make sure to leave a link to my educational video about the RSI up in the corner in the eye of the video. But we want to open up the RSI indicator right here. And real quick, we want to do some changes. So we go to the settings tab for the RSI. I want to go to the style tab right here, and I want to uncheck the RSI based moving average. This is basically a moving average of the RSI. And what you can also do is that you can uncheck the RSI upper band, the RSI middle band, the lower band, and the background fill, because we only want to look at the RSI. We don't really care about overbought and oversold conditions because we're going to use the RSI for another reason. Now we're ready to click OK. The next indicator we do want to use here is the MACD. And once again, if you want to learn more about how to use the MACD indicator correctly, I have a video about that as well, and I will link the video up in the corner in the eye. But let's open up our MACD indicator here. press X, and once again we want to do some quick changes to the MACD settings. We go up to the settings tab here, and what we want to do is simply uncheck the MACD line and uncheck the signal line. Now, to understand why this signal was the strongest signal out of these three signals we have on the chart, we need to take a look at how the indicators acted. So what I'm gonna do here is that I'm gonna open up a simple trend line here, and what I'm gonna do here is that I'm gonna compare how the price reacts compared to the indicators. So if you take a close look here, let's make this a bit more thick so you can see that from this low to this low, the price printed a higher low, right? But if you look down on the RSI indicator, you can see that the RSI printed a lower low, right? So the RSI printed a lower low. The same thing is also very true with the MACD, a lower low. So you can see in this case we have the price printing higher lows, while both the RSI indicator and the MACD indicator printed lower lows. This is what we call a hidden bullish divergence, and it indicates a potential continuation here towards the upside. So here we have both the signal that we got from our indicator, but we also have a bullish signal on the RSI and a bullish signal on the MACD indicator. So we have three bullish variables happening at the same time. So this is where I would have taken the trade. But now guys, let's take a look at this bearish signal right here. If we take a look at the price, we see that the price prints a clear higher high, right? And as you can see, we actually had a divergence on the MACD because the MACD printed one high and then a lower high. So this is what we call a bearish divergence. However, you can see that the RSI indicator did not agree with this divergence because the RSI printed just as the price, we printed one high and then a higher high. So in this case, we only have two bullish variables, while on this case we had three. So this is still a trade you could have taken, but this one right here is stronger based on the divergence signals. Alright guys, so I really hope you enjoyed this video. Now, if you want to learn more about either the RSI indicator or the MACD indicator, which are two of my favorite indicators, please don't hesitate to check out one of these videos next, and perhaps preferably both.